Welcome back. It's now time for our weekly market update with Catherine Murray, host of The Buck Stops Here. All yours, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we are seeing markets continue to move higher today with particular strength in the U.S. small cap space, so the Russell 2000, which tends to be a positive leading indicator. In other words, the smaller cap companies do well when the broader economy does well. The TSX is up mildly on the day, but just stepping back for a moment, when we look at year-to-date performance, the U.S. stock markets are up by about double-digit territory. The TSX has been weighed down by many of the commodity prices and therefore weighing on various sectors which tend to be overweight in Canada, commodities versus other areas. And so year-to-date performance is only up flat to up very mildly for the TSX. We are looking at the Russell 2000, as I mentioned, the small cap index in the United States up by over 1% today. Bitcoin is resuming some of its recent strength, up by 2%. And we're also seeing a bit of a nice rebound in the price of WTI, up close to its best levels on the day so far, up by about 1.2%. Now, the narrative in the broader market right now is that perhaps we'll have a soft landing, not a hard landing, meaning a severe recession. So that's one key aspect. And then also there's the view that we will see tighter for longer. So more tighter monetary policy and higher inflation for the foreseeable future. And that is really supported by the strength that we're seeing in the economic data, specifically in the United States. The first quarter GDP was revised higher this morning. You've also had a very tight labor market that has not changed at all. And then you've also seen some stability in the housing market once again. We're also, of course, hearing from the top world central bankers that they do expect to see inflation higher for longer. So in other words, we likely will see monetary policies around the world continue to at least keep at bay and or raise rates, which we actually saw from Sweden this morning. Away from that, the bull case, which is, of course, supportive of strong economic data, is that we will also see perhaps a little bit of a rebound in the back half earnings results. So in other words, some of the concern that we've seen as it relates to corporate profits for the back half of 2023 might not come to fruition. In other words, it'll be a little bit better than perceived. And that is leading a lot of investors who've been sitting on the sidelines, recognizing that there are a lot of complex dynamics going on in the market, to have a fear of missing out. So FOMO is really present. And I think that's why you've seen a lot of the investors continue, or at least start to put money back into the market. Hence, we've seen a very strong rally for the past number of weeks, again, specifically in the United States. But it is translating a little bit into the Canadian market as well, in terms of at least having some stability and a bit of a floor in the broader markets. In terms of some stocks to watch, Paychex did report strong earnings. They beat and they raised their guidance ahead of expectations. And there's a lot of media coverage right now out there looking at Apple, the stock Apple, reaching that $3 trillion market capitalization mark. So in other words, investors continue to buy those stocks that have been working. Away from that, as we look at the TSX, I mentioned it is up slightly on the day, really being led by energy, financials, as well as consumer discretionary. Despite the fact that we are seeing record high household debt levels, the economists do not believe that will have a risk of an economic shock, or lead to a risk of an economic shock, despite that incredibly high household debt. Interestingly, we have had 145,000 immigrants in the first quarter. That's the largest number since 1972. A good thing from an economic growth perspective, but it has, as we all know, put a lot of upward pressure on housing prices to the tune of about 50%. So housing costs up by about 50%, again, given this influx. BMO is cutting about 100 jobs out of their capital markets group. We're also seeing Rogers cut jobs because of the Shaw integration. And lastly, just as it relates to inflation here in Canada, it has subsided from April's 4.4% reading. This week, we did get a reading of 3.4%. So still elevated versus where many central banks would like to see this arbitrary, I'll say it, 2% inflation target. So again, maybe a little bit higher for longer. We'll see what the Bank of Canada does because the trend is lowering, and that is exactly also what they want to see. Nima, I'll leave it there. Back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of The Buck Stops Here, airing Sunday mornings at 9 a.m. Eastern only on the News Forum Network. All right, we've got to go to break now, but when we return, we're going to have more news from around the world, so stay with us. Forum Daily News will be right back after this short commercial break.